Fannie Mae just announced their latest housing market forecast, and get this, they are now forecasting that existing home sales next year will fall to multi-decade lows. They also provide their forecast through 2025 for home prices, home sales, also rates as well. So I just kind of want to dive in because when I was reading this forecast here, just announced on the 21st of November, my jaw had really dropped here. So this is based on Fannie Mae's latest predictions posted on November 21st from their Economic and Strategic Research Group, or their ESR group. They say here that with mortgage rates having previously neared the 8% mark about 1 month ago, this group now expects that existing home sales to decrease further in the near term, but bottom out in early 2024. Regardless of whether the economy manages a soft landing or enters into a mild recession, this group now forecasts that rates in 2024 will decrease from their recent highs and average 6.8% by the fourth quarter. As such, this group expects home sales to begin to increase modestly over 2024, but to remain constrained by the likely persistence of the so-called lock-in effect, because people are not really motivated to sell their houses when they have a rate of less than 3 or 4% and take on a 8% rate or a 7.5% rate. And that's the lock-in effect. That's causing the amount of houses being listed for sale to be muted right now. Also, a low supply of houses for sale. New home sales and housing starts, which have remained comparatively resilient over the past year, are expected to remain so in 2024. By the way, Fannie Mae is still predicting a mild recession next year. They're projecting that home sales will likely to bottom out in early 2024. But remember I said they're now predicting for multi-decade lows for the number of existing houses that are going to be sold in 2024. So they're saying here that home sales will bottom out in early next year, regardless of a mild recession or a soft landing, as the peak drag from rising rates passes. We forecast that mortgage rates to decrease gradually over the next 2 years. When rates do ease, we do expect home sales will begin to rebound, albeit modestly due to the ongoing lock-in effect. The continuing lack of existing houses for sale will likely remain supportive of new home construction. That's exactly what we've been seeing this year, because this year we've seen rising rates, very limited inventory levels of existing houses. And this is causing a lot of home buyers to move to brand new home construction because there's a glut of inventory. And of course, because builders can offer all these rate buy downs and basically entice buyers to buy houses right now. Okay, so here's a summary of their housing market forecast through 2025. The first time I've seen any company provide their forecasts through the next couple of years here. Let's first talk about housing starts, then we'll talk about home sales. I have a lot to share regarding that. So total housing starts for 2022 decreased by 3% compared to 2021. They're also calling for housing starts, which, by the way, this includes multifamily plus single family houses, to decrease by 11% this year, and decrease by 11.2% in 2024. Then to rebound in 2025, an increase of 8.6% compared to 2024. What I'm more focused on is single family housing starts, which of course is the beginning phase of the construction of a brand new house. That in 2022 decreased by about 11%. They're forecasting for 2023 to decrease by 8.9% compared to last year, then to decrease further next year, down by 4.5%, but then to rebound by 10.4% in 2025. So they're basically saying here that we're going to see a huge pullback in housing starts over the next 2 years, but then to rebound greatly in 2025. Let's talk about home sales. So new home sales decreased by about 17% in 2022, and also existing houses decreased by 17.8%. Their forecast for new single-family houses nationwide is a gain of 7.3% this year, then to decrease next year, then to increase once again by 8.6% in 2025. Now, here's where it gets really interesting here. This is the existing single-family houses, including condos and, of course, co-ops as well. These numbers, by the way, agree to the National Association of Realtors. So in looking at the total number of existing home sales in 2022, it was just over 5 million. Again, a decrease of 17.8% compared to 2021. Back in 2021, there was 6.1 million. So this year, 2023, they're calling for only 4.127 million. So just over 4.1 million this year. That would be a decrease of 18% compared to last year. And a friendly reminder, my forecast this year, which I mentioned several months ago, is in the range of 4 to 4.1 million. We'll see who is right here, but it's basically right in line with what Fannie Mae is saying here. Then 2024 at 4,035,000, a decrease further by 2.2%. This, by the way, is a downward revision in their previous forecast that was for October, because 1 month ago, their forecast for existing home sales in 2024 was about 4.13 million. Now it's down to 4,035,000, which, by the way, according to my analysis here, that would be a 28-year low. Absolutely insane. Then it pick up again in 2025, increasing to 4.55 million. Now, I want to provide some context regarding how these numbers are different from previous years here. So the forecast for 2023, again, 4.127 million. That would be a decrease of 18% from last year and a huge decrease of 22.7% compared to 2018 and 2019. By the way, that percentage is the same for 18 and 19 because there was exactly the same number of home sales for each of those 2 years. In any case here, at 4.127 million, that'd be the fewest amount of existing home sales since 2008. That would be a 15-year low, therefore a housing crash of home sales, not a housing crash of home prices just yet. Now, here's where it gets really spicy here because 2024, just over 4 million for the entire year. That'd be the fewest number of home sales since 1995. In other words, a 28-year low for home sales nationwide. That'd be a huge decrease of about 20% from 2022 and a huge decrease of 24.4% compared to pre-pandemic levels. Look at this, 4,035,000. You have to go all the way back. I mean, it's worse than 2008. That really says a lot, right? In 2008, there was 4,110,000, yet their forecast is below that at only 4,035,000. So you have to go all the way back until 1995, when at that time there was 3,849,000. Huge decrease of home sales. If that actually happens, that'd be pretty wild here. Then in 2025, they're calling for a rebound in our housing market, at least for home sales, to increase to 4.55 million. Now, for comparison's sake, this really just kind of blew my mind here. So in 2021, there was 6.12 million home sales. That was a 15-year high. So if this forecast actually comes into fruition, where we have just over 4 million home sales next year, we would go from a 15-year high in 2021, and then 3 years later to get to a 28-year low. I mean, quite the volatility if that actually happens. Absolutely insane. All right, let's change gears slightly here and talk about their forecast for home prices based on Fannie Mae's HPI, or their home price index. So in 2022, they saw we have an 8% gain of home prices compared to the previous year. That, by the way, is Q4 of 2022 compared to Q4 of 2021, to be exact. Then this year, they're calling for a 6.7% increase in prices. Then 2024, gain of only 2.8%. Then, even though they're calling for an increase by about nearly 500,000 more houses that would be sold in 2025 compared to 2024, they're calling for home prices to decrease by 0.4%. So in looking at this table right here, their peak for home prices, or the peak increases in home prices, is actually in Q4 this year and Q1 of 2024. Thereafter, they're calling for prices to increase, but not to increase at the same levels, then to decrease by 0.4% by the time we hit Q4 of 2025. In regards to their forecast for mortgage rates, have a look at this. They're calling for peak rates, or the peak levels of interest rates, to be in Q4 of 2023 at 7.7%. Thereafter, they're calling for rates to decrease, but only decrease very slightly each and every quarter. So for example, 2023, they're forecasting the average rate for a 30-year fix, again, for people with great credit, at 6.9%. Then next year to increase to 7.3%. That'd be the average for the entire year. Then to decrease to 6.9% in 2025. What do you guys think about these real estate market predictions for interest rates, home prices, and home sales? Pretty big changes, especially in 2024 regarding home sales. It's absolutely crazy. Lastly, out of all the single family mortgage originations, this of course is purchases and refis, they're forecasting that the share of refinances in 2023 overall would be at 16%. In 2022, it was 31%. So share basically went in half there, then to increase to 28% by the time we hit 2025. To me, this doesn't make any sense whatsoever, because why would the share of refinances double in 2 years, given their forecast is virtually the same this year compared to 2025? So if rates are basically flat over the span of 2 years, why would the share of refinances double in that same time frame? Doesn't make any sense to me. What does make sense to me is this huge decrease in home sales, a 28-year low, which is absolutely insane. But that's today's video. Please leave me a comment below with your thoughts regarding this real estate market predictions. And this is actually the biggest decrease I've seen, or the biggest forecast of home sales I've actually ever seen. So my jaw was dropped, to say the least. I can't get over it. Anyways, thank you so much for watching today's video. I appreciate you. Happy Thanksgiving, by the way. And I hope you have an awesome day. We'll see you in the next video.